A lot of us have taken some big losses in the stock market lately, so in this video we're going to talk about 3 ways to recover from a large stock market loss. Now, being able to recover from a loss when investing is extremely important to be successful in this game because, as we'll talk about in this video, it's going to happen. You are absolutely going to lose. It happens to every single investor, including billionaires. But the way to win in the stock market over the long term is dealing with those losses properly. So let's get into the 3 ways to do that. Now, the first thing that you need to do to recover from a huge loss in the stock market is to first accept the loss. Now, what do I mean by that? Well, it's like we just talked about a few seconds ago. Losing is a part of this game. You can't play basketball without dribbling, right? Well, you can't invest without losing sometimes too. In fact, in the stock market, oftentimes you're going to lose way more times than you actually win, which sounds crazy, but this is why it's important to understand this when you're investing. Some of the greatest investors of all time, I'm talking about guys like Stan Druckenmiller and George Soros, they only win on 30% of their trades. So you know what that means, right? 70% of the time when they're putting on a trade or an investment, they're losing on it. And that's completely normal. And these guys are multi-billionaires. And like I said, some of the best of all time, right? So if they're doing that well in the stock market and losing that often, what does that tell us about this game? It proves, once again, losing is an important part. And I give these examples because expectations when you're entering the market are really important. If you think you're supposed to be winning all the time on every trade you put on, you're supposed to make money, well, then you're going to be disappointed. And not only will you be disappointed, but the way you will be trading will be wrong. You need to trade and invest with how markets work, not against them. Doesn't make any sense swimming upstream, right? You want to swim with the current of the market. But this is a common thing that new traders don't understand. I mean, the same thing happened to me. I used to judge my success on how many trades I had that won versus how many that lost. But by doing that, I was setting myself up for pain, because what you're actually supposed to focus on is not how many you got right versus how many you got wrong. It's how much money you made on the ones that you got right versus how much you lost on the ones you got wrong. So when we go back to those legendary investors I was talking about and we say they only win on 30% of their trades, well then how do they have billions of dollars and how are they the best? Well, on those 30% of trades that they win on, they win huge amounts of money. On the 70% that they're losing on, which is far more, they're only losing small bits. So when you put it all together in the end, the ones they won on made way more money than the ones they lost on. And that's why they're billionaires now. So instead of focusing on how many you got right, focus on how much money you're actually making at the end of the day. Because that's all this comes down to, right? Are you a profitable investor or are you not? Doesn't matter how many times you're wrong about the market as long as you're making money at the end of the day. That's the beautiful thing about the stock market. If you're wrong, you can just change your opinion and become right and then make money. You know, this channel is called Fallible for a reason, because if new information comes in, we're going to change our opinions. We don't care about being wrong most of the time even, because we can change, become right, and make money. So we are fine losing little bits often, because when we're constantly changing to become right, we're going to make that big money. So the first thing you have to do to recover from that huge loss is to accept it. Now, the second thing you need to do to recover from that loss is avoid revenge trading. So what is revenge trading? Revenge trading is when you have a loss in a particular stock and then you get mad about it. And you say, now I got to trade this stock, get back in and make up what I lost plus more. I'm not going to let the market screw me over like this. So just like the name implies, you're trying to get revenge on the market for causing you a loss. Now, this mentality is a recipe for disaster. Because here's the thing, the market doesn't care about what it owes you. It doesn't care if you took 10 losses in a row. None of that actually matters. So by you thinking it matters and trying to exact revenge, you really only end up hurting yourself. And don't get me wrong here, it's easy to fall into this mentality. It's happened to me a few times. I'll show you an example right here on Moderna when I was trying to trade it recently. You want to see where I got in this chart? Right here on this bar, December 1st at the top. I got in up here and within one day the thing collapsed. Look at that. It went down as much as 27% in one day. So I got into this thing at the morning, right up here, and by midday it was all the way down here. And because of the way my strategy works, I have risk control in place, and if a price goes down to a certain level, I get out of my stock. But what really sucks is when that happens in the same day, and I'm not like a day trader or anything like that. I'm more longer term. So immediately within a few hours, I lost a big chunk of money. Now, when something happens like that, a bad trade that stabs you in the stomach, then of course you're going to feel a little salty. You are going to feel that revenge feeling like, you know what, I need to get this money back. So did I feel that? Yeah, of course I did. But I've also fallen into that trap so many times that by this point I know, no, I got to let it go. I got to accept the loss like we were talking about in the first step and move on. There's no point in banging my head against the wall on this stupid mRNA trade, trying to make it work if it's not working. You need to really just forget about it, move on with your strategy, keep executing what your strategy or system is telling you to, and really keep each trade separate from from the other trade. What you did one trade ago does not affect what you're doing in the next trade. That's another problem that we all have as traders, is that we started lumping them together. But each event or each trade is separate. That's why I said the market doesn't care if you lost 10 in a row. Doesn't mean the 11th one you're going to lose again. You might win. Or yeah, you might get 11 losses in a row. And I'm not saying this to say that the market is completely random. I'm saying that in any strategy, even a successful one, you could have a string of losses. It happens. But if you get too heady with it and start lumping them together and you start feeling feelings about the market, trying to get revenge, saying I don't deserve this shouldn't happen to me, that's when you're going to get in trouble and you're going to start spiraling more and making stupid decisions outside of your strategy, because you always got to stick to your strategy. That's how you win in the stock market. But letting that revenge notion take over, not good. So always remember, when you take a loss, do not start revenge trading. Now, the third thing you need to do to recover from a big loss in the stock market is to start small. Now, what do I mean by that? Well, if you've taken a big loss, you're probably a bit shaken, and that's okay. It's normal. Losing money isn't fun, and it does have huge psychological effects. That's why we're talking about it in this video. If it was easy, we wouldn't need to talk about it, right? So if you're a bit shook and you feel bad about it, don't, because it is normal. But what do we got to do? We got to dust ourselves off and keep going, right? But again, we might be a little scared to re-enter the market because of what just happened. The wounds are still fresh. So a nice trick you can employ is to start small. So maybe before you took your big loss, you were investing $5,000 into every stock that you were buying. Well, after the loss, if you're feeling hesitant, then why don't you bring that down a bit? Instead of $5,000 in each stock, why don't you put $1,000? Lowering the size or the amount of money that you're putting into the stock can take some of that pressure off. The stakes are lower. You can keep going like you have to. You have to, but you can do it with less on the line. And what's the point of this? Well, there's a few benefits that you get from it. The first is that by going with a smaller size and slowing down a bit, you could really analyze the strategy that you have for the market. Maybe that big loss you took was normal, but maybe it was something that you did wrong. So by reducing that size and running your strategy a little further, you can see, hey, is everything working right here? Was that just a normal loss or something that's outside of what's supposed to happen? And remember, losses are normal, but you can control how much you lose. So with the smaller amounts, you could keep going slowly, analyzing, and over time, you could build your confidence back up. And you don't have to feel bad about this, like, oh, I'm weak, I can't take the market, so I have to start small. No, because this is what some of the greatest investors do. I mean, they're not talking thousands of dollars, they're talking millions and more. But a guy like Paul Tudor Jones, another legendary billionaire investor, he'll do the same thing. He'll reduce his size, play around a bit to get his confidence back, and then he'll size up once again. I do the same thing when I'm playing basketball at the gym. Sometimes I get out there and I'm just absolute trash, just garbage, and I have no business being out there. Just one of those days, it's like taking an L. So what I do during those times is I go on the off court, I step up to the free throw line, and I just shoot. And I shoot over and over and over again. And there's a few things I'm doing while I'm shooting those free throws. One, I'm adjusting my shot, which is the same thing as adjusting your strategy. Like, what was I doing wrong out there? What do I need to fix? Two, I'm building up that confidence again. When you sink 10 in a row, you feel pretty good. And you're thinking, okay, maybe I'm not horrible. Maybe I still got something here, which of course you do. You don't become horrible at trading and investing or basketball in one day. But the point is, being by myself at that free throw line, no pressure, no one around me, I get to slow it down, focus, and really just get back to the basics and then build up from there. When I feel comfortable, get back into the game. It's the same idea in the stock market. And when you take a step back and start small and start building once again, it's a good time to reanalyze your goals. Because a lot of times when you're in the heat of it, when you're taking a big loss, you end up not being able to see the forest because you're stuck in the trees, right? So when you slow down and step back, you could start reminding yourself, why are you in the stock market? Well, one reason I'm sure is to build long-term wealth, right? But to build long-term wealth, what do you got to do? You got to be in the stock market long-term. So this one trade that you made on this one day of what's going to be a 30+ year long career for you in the stock market, you really cared that much about it? Are you really going to feel that bad about it? On this one tiny little trade, you are a long-term investor. So there is no point dwelling and feeling bad about a single loss. Another thing I do is remind myself that the stock market isn't everything in life. And I know that sounds like a cop-out, but it is important. Because sometimes I will just be staring at my screen all day and things are getting redder and redder and it looks like the end of the world. And then I'll just open a window and the sun is shining, people are outside, birds are chirping. And it just shows me that, hey, maybe the world isn't ending. And that's once again the problem where we get so hyper-focused on this one little stock market thing that we forget perspective. And that's really what we need, especially when it comes to these losses. Because they do hurt and they are brutal. But we always got to be guarding ourselves psychologically. Because psychology is always going to be a big thing in the market. Which is why we're talking about all of this. You took a loss, you took a hit, that's okay. You want to reset your psychology and then keep going. So remember, after you take a loss, start out small. Now there's one more extremely important thing that you need to do if you took a loss in the stock market. And we actually actually made a whole video about it right here. And it's always important to come back to this point because this really is a key factor to long-term success in the stock market. So definitely check it out by clicking this video right here, and I will see you there.